Good morning, traders. This is John Paul, DayTradeToWin.com. Today is July 31st, 2014. We're looking at the E-mini S&P Market, and I'm waiting for the Atlas Line software to give me a signal to go long or to go short. I just have to wait until the signal appears on my chart before I enter. While we're waiting, let me show you what happened yesterday, July 30th, 2014, on the E-mini S&P. The market was very volatile. It went down. The entry short was 1967 quarter, followed up by all of these P's and these S's that you see. They are additional trades, pullback, and strength trades to continue this short signal to the downside. You don't have to take all these signals. The main signal was definitely 1967 quarter. Now today, before this signal comes up, I know exactly where I'm going to go long or short because it's based off of two consecutive closes, either above or below the Atlas line. So here you have two consecutive closes above or below. In this case, it's below the Atlas line, and it triggers an entry to go short at 1950. So I'm going to bring up my dome here, change my account, looking at about 12 contracts, and I'm going to place the target and the stop here before I place this trade. Remember, the target is always based off the current conditions. Current conditions are about 13 ticks, 3 1/4 points, and that's what I can expect.
Order pending.
13 ticks on this trade because that is
Order
what the
filled.
current conditions are telling me. So I'm short here, 13 contracts. I expect the market to go down. It may look like yesterday, a pretty good down day, downward move, and it looks like this is what's going to happen. But if the trade does not go in my favor, I still have to protect myself. Even though I know the exact target that I want, remember I'm using the ATR, the average true range, to tell me that, I still have to have my stops in place. So I have a catastrophic stop, I have a time-based stop, and I have a prove-it stop. I'm using these three elements to get me out of the trade, whichever happens first. If this trade takes too long, if it shoots straight up and proves that it gives me a closing price on the opposite side of the Atlas line, or if there's a catastrophic move against me. So I'm protected here. Let me also turn on the text and marker. Okay, so now we could see exactly where I entered and where my stop is and where my target. You should know the stop and the target ahead of time before placing the trade. Now the day may be a repeat of yesterday, which is the market's going to go down. But remember, always look at price and price action as your guide. So if this trade makes the profit target of 13 ticks, but then quickly reverses and moves higher, remember, as soon as it crosses the Atlas line, I'm going to be looking for a long trade. I also just noticed that there was a strength trade to go short. Those S's there on the chart appeared, meaning this is a follow-up strength trade to continue to go short if you'd like. You don't have to. I think 13 ticks
Target
is more than
filled.
enough profit to take. For me, 1950, I'm very happy with the target, and I'm not interested in continuing to take this short. But those of you who do want to take a strength trade short can. My name is John Paul. If you have any questions, if you'd like to join up for our next training session, email us at support@daytradetowin.com. Or if you'd like to join the next group mentorship class or individual mentorship, feel free to call or email us. Thank you.